Welcome, and thanks for joining us. Moss Adams is pleased to present another in our ongoing series of continuing professional education webcasts. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. For example, you can click the File folder icon to download the group attendance sheet and a PDF copy of today's slides. You can ask our presenter questions during the webcast by clicking Q&A in the bottom left-hand portion of the icon bar and typing in your question. We'll do our best to answer all questions during the presentation or follow up via email. We'll ask polling questions throughout today's presentation. Per the National Association of State Boards of Accountancy webcast CPE standards, CPE credit will be awarded based on your participation in these polls. To respond to a poll, click the button next to your answer. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. Please have all group members sign the sheet, and please remit only one sheet per group. Also note, today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions. CPE credit can be awarded only to participants registered as themselves and is not available to participants who view the on-demand version. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon to open a PDF file you can save to your computer. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances. We're now ready to begin. Thank you.
So welcome to our presentation of construction project internal controls, leverage controls to improve performance. Our presenters today include Curtis Matthews. Curtis is the partner in charge of Moss Adams Construction Audit and Advisory Services practice. He brings over 30 years of relevant experience. He's helped project owners negotiate favorable contract terms, implement strong project controls, monitor construction controls performance, and ensure that construction project charges are compliant with contract requirements. He has been leading this group for, as I mentioned, over 30 years and is a certified public accountant, a certified construction auditor, and a certified professional estimator. So we want to welcome him today. Joining Curtis is Jeff Witt. Jeff is a senior manager in Moss Adams Construction Audit and Advisory Services practice. He brings over 18 years of accounting experience, while his focus is on performing efficient construction contract audits based on detailed planning and risk assessment, focused on those aspects of contract compliance that are of greatest risk to our clients. So he's not only a certified public accountant, he's also a certified internal auditor and a certified construction auditor. So today, welcome Curtis and Jeff.
So for all of you participating, Jeff and I think that this is our cue, so we're going to get started. We want to welcome you to our webinar today. We appreciate your joining us, and we absolutely hope that there are good takeaways for you that you can take back to the workplace and apply and be successful with. Moss Adams itself, I think, for a lot of you on the call today, know about the firm and whatnot. For that one person out there, or maybe two, that doesn't, because everyone knows about us. We're a national audit and consulting firm. We perform over 50 construction audits annually. We review contracts. We have very solid knowledge of good controls to put into contracts for construction, so there's clarity and there's good opportunity for contractors to recover the your charges on your projects that you have. We perform cost and control audits to help ensure that the charges that you have, mainly for GMP type contracts, cost reimbursable contracts, making sure that you're able to identify the costs that you can bill for and that those costs are compliant and help you to work in such a way that when you are billing for your project costs that you're going to get maximum recovery and that your payment applications are going to sail quickly through the owner's processes and you'll be able to get reimbursed quickly. We have a lot of federal audit expertise. Jeff and I both were former federal auditors, and we're full charge auditors. We help a lot of organizations comply with federal rules and compliance. We also help with the school audits that we mentioned here, the Prop 39 in California. But in addition to that, I think another core competency that we bring in Moss Adams is we help organizations to implement strong policies and procedures so that you have successful construction projects. We work with projects of various sizes, and that's Moss Adams. So there's a little background on the firm. Today we're going to talk about, and this is all about you and about your needs. So our main focus is, that's the end of the information on Moss Adams. There's going to be a lot of information. Hopefully that'll help you. So we do a lot of, in our construction work, we find a lot of opportunities for you to improve. There's a lot of exposures to a company that's doing business today in the construction environment, and you're going to get exposure through this webinar to some of the key exposures that we run across that hopefully you can recognize and address and help to mitigate so that you can be successful with your construction projects. We're going to talk about general contractor cost recovery opportunities. We're going to talk about change order controls and opportunities, construction controls that are needed for projects, and we'll talk about key procedures that I was talking about earlier. We see a lot of procedures. We have a lot of exposure to best practice procedures, and we're going to share some of that information with you today. We'll talk about the internal audit cycle and the benefits of internal audit, and bringing this training back to your workplace so that you can be successful, as we mentioned earlier. And to kind of go back to the change order piece, the section you're going to see from us is going to be a lot of information on, when do you need to identify a change order? How do you support a change order that you're going to make? This isn't about producing change orders that aren't legitimate or there isn't a good basis for them, but it's about identifying opportunities to be sure to protect your organization from causes of change orders that you had nothing to do with and you really do need to be reimbursed for as you do your work. So I just kind of wanted to clarify that as I mentioned that particular item. So let's get some information on you. There are these polling questions here. The reason we ask them is so that we can give you CPE credit. You need to answer them. So please go ahead and answer the polling question.
As a reminder, go ahead and select the best answer. There's no right or wrong answers here. This kind of gives us a little feel for our audience. Once you've selected the button next to your best answer, go ahead and press submit so your answer can then be recorded.
Okay, well, let's go ahead and close the polls.
Looks like we have, 37% shows us general contractors. with a good portion, next good portion of subcontractors, project owners.
Yep, and then 12% are your project owners, so this will be useful information to you as well. Good. Well, thank you for answering this question, because it also helps us to kind of gear our comments toward who you are and what your needs are, and we definitely have a mixed group here today. A mixture of owners and contractors. In terms of construction project exposures, one of the most common exposures we see on construction projects, and we see a lot of them, is inaccurate project financial records and reports. And the area of most risk and exposure, and this is, I would say, over 50% of the time when we come in and do a construction audit, this isn't right. I mean, it's not accurate. And it's unfortunate, but it just is what it is. And that has to do with budget versus forecast. Forecasted cost of completion or estimated cost of completion. A lot of organizations don't really have a regimented approach to doing this. They may try to manage it through what they understand about change orders, or I've seen organizations that basically look at what cost was incurred to date and compare that to the budget, which is absolutely wrong. And I think that the key takeaway here is that for those that do it well, it's pretty regimented and it's pretty straightforward. It's all about understanding this, having success here in good project financial records and reports, is having good information on what your various activities are on the project, basically your schedule of values, having your commitments measured continuously against your schedule of values amounts, and understanding where you stand at any given point in time against them, having consistent cost codes applied as you're recording your commitments and your actual costs. Some organizations go to the point where they'll not only track commitments, but they'll also track open commitments and closed commitments, so that they understand kind of once open commitments, one where the subcontract isn't completed or the work isn't complete, and then a closed commitment is one where the work is complete. And understanding those two aspects of commitments helps organizations to know whether or not they overran a subcontract or not. But at a minimum, you absolutely need to know what contracts you have out there against the various obligations or budgeted obligations you have for your work that's going to be performed under your schedule of values. And having an up-to-date regimented approach to that is important. We see a lot of cost shifting from one line item to another, and inability for organizations to track that and understand where costs are coming from and going to. We see that on the cost side, we see that on the commitment side, and it just, I think it's really important to just keep it straightforward. I heard someone once say a long time ago that accounting is actually quite simple, and if it's done right, it's handled simply. It's the accountants who can tend to make it overcomplicated and screw it up badly, and that's kind of what can happen with your forecasted cost versus your budget. If you have a simple, straightforward, regimented process, you understand which codes apply to which items, don't add a lot of extra nuances to it, you have a greater chance of success. That just comes from looking at how organizations manage this well and how some organizations don't. The next item here I would mention is where charges differ from actual costs incurred. This is, when you're billing based on actual cost incurred. Well, there are a number of subcontractors on the line, and there are other organizations on the line as well, that likely tend to deal with lump sum contracts on a regular basis. And invariably, when you land a cost reimbursable contract and you're used to doing work on a lump sum basis, basically, you're getting paid, and I would think the vast majority of you know this, you're getting paid based on the percentage of work complete against the schedule of values items. When you're doing work on a cost reimbursable basis, that is not how you should be billing. and that's not how the cost should be coming across. You could end up severely underbilling or overbilling if you're just billing on a cost-type contract based on the percent complete of budgeted schedule of value items. So it's extremely important to have good cost reports, good reconciliation of those cost reports, understanding what's in the cost reports, making sure that the costs tie out. And I can tell you that probably on 20 to 25% of the projects we look at where the contractor is used to doing work on a lump sum basis, the cost report doesn't tie out, and that's the first thing we look at. So, and essentially that's the first thing an owner is going to look at. And so you got to have a good process for handling that and addressing it, and it's just a common construction exposure. The other bullets here, the different items, are directly related to that, whether it be documentation for work charged on the job cost report or labor hours that do not match the hours worked. We run into that quite often. When we do our work and we're looking at charges on the cost reports, we use computer-aided automation techniques to CAT tools to look for anomalies and issues in the labor hours and in the data that's there. And we often find things like, people charging more hours than they could possibly incur. I remember one instance where I saw somebody charging more than 24 hours in a day type of a thing. Or we'll look for unusual dates for charges, or we'll look for labor rates that don't match the category, that they'll change several times, or we'll look for in the application, if you don't have rates negotiated, we'll look for the application of burden rates that don't match the actual burden cost incurred, because that's just a straight up formula and it's easy to look at. So there's a lot of ways to not understand the cost of labor and not have it being charged properly, and we do see those. And a lot of organizations say, no, we have a closed loop system, we have timesheets, we have a timekeeping system, we have cost reports, and then when we dig into it, we find out that these reports and processes and supposed controls don't really necessarily tie out or work properly. So it's critical, and because labor is such a large component of cost, to have a good understanding of truly what's going into your job cost system. We'll see on the labor rate side of it, when rates are being negotiated and agreed to with the owner, a lot of times we'll see that the contractor that is proposing the rates doesn't have a good understanding of all the costs that are going into the rates or the profit related to them. And in some categories of labor, they're losing money every time the people work under certain rates, and in other rates, they may be making money, but it's a lot left up to chance because there wasn't a good historical perspective, a good look at historical cost related to the people that are being bid on the job and the rates that are being negotiated. Well, I would strongly encourage you to negotiate rates on the basis of facts and supportable information, and not only for the rates, but for the expected hours incurred. I mean, there's a lot of takeoff information you can use. You can use RS means, you can use other tools to gain that information. But some of the best information you'll have for forecasting your hours is, what did it cost to do the job the last time? Similar work, what was our metrics when we've done this work before, and tracking those metrics. It's amazing how many contractors do not track this information and use it when they're bidding the work. And the more regimented and tied down you are, the better off you are. Now, I would say some of the exposures I'm talking about and some of the issues we see is because of maybe the need for various skill sets on a project. There's a need for good project management skills. There's a need for people who are good at quality control. There's all kinds of various skill sets required on a project. And having people with strong expertise in accounting and understanding cost accounting and being able to relate that to construction is clearly a key component to a project, and a lot of times we won't see that. When we're looking at who's doing the billing and how things are put together, there really isn't anybody with an accounting background nearby. we just had a call yesterday, Jeff and I did, with a client. We're working on a construction audit with them, and for the client's pretty livid, really, with the contractor, and we're trying to help kind of rectify the situation, and the client's basically unhappy because for several months the contractor has been unable to timely produce billings that made sense. And now they finally hired a controller who's got a lot of expertise in construction. She understands how to cost the jobs, and lo and behold, a lot of the issues that the contractor's been experiencing are going away. And so, we're working with them through the process and making sure that all the billings are what they should be. But, I can't understate the importance of having good, strong, competent people with accounting backgrounds helping to prepare some of the billings and whatnot that you have. And you can outsource that. You can get help with it. You can insource it, hire people to do it. It just depends. But having that expertise invariably pays for itself. Invariably. They can identify the cost, and they can bill for the cost the way that they should. Some of the other opportunities we see that are missed are available discounts are not taken. And when you're doing lump sum work, that's just profit going right out the door. There's also, insufficient project asset tracking. I'd call your attention to that. So you basically lose assets that you have, which is really easy to do on a big job, as many of you know. And, for your subcontracts, when you do a credit, for the work that you performed, you need to be sure to get those credits. We're just going to move on to the next item here. We'll talk a little bit about cost recovery in a little more detail. So essentially, a key component in accomplishing this goal and to be paid timely for all your incurred costs is to have a good, strong contract, one that is clear in its terms and detail. Often contracts that we see when there's issues and problems are unclear. Some of the costs that are reimbursable, and we're talking basically cost recovery, so we're talking about reimbursable contracts. The contracts are unclear as to what's reimbursable and what isn't a reimbursable item. And we would encourage you to put as much clarity around that as you can. The school of thought that gray areas are good and it gives us an opportunity to deal to push costs through is probably not a good approach, because essentially when the two parties aren't on the same page and the owner finds gray areas, they're going to take a position that's going to be in their interest. And when you're billing for costs, you may take a different position on the things that you're billing for. And what you really want to do is have good clarity around what's reimbursable, what isn't, so there's no questions. Costs flow through quickly. You're reimbursed for all the costs that this job is causing you. And let me talk with you about that. So, there's a big difference between direct and indirect costs. And any cost that is caused by a construction project should be built into that contract so that you can be reimbursed for that cost when it's incurred. If that job, and the way to think of it is, if the job didn't exist, would this cost exist? Because if that's the case, then it's an overhead cost. But if because the job exists and the cost exists and is incurred, we need to find a way to get that reimbursed. It's only fair, to be reimbursed for the cost of doing business. That's totally win-win for the contractor and for the owner. And I think that's a good way for you to be thinking about direct and indirect costs, and be sure to make it clear as to what direct costs can be reimbursed in your contracts. Having a solid understanding of the cost drivers I'm talking about and the forecasted amounts at the bid phase can only help you in the long run. So let us give you some perspective on some of the common areas of cost dispute, when I'm talking about unclear terms. So we actually see unclear terms around how fees are to be calculated, especially when change orders are involved. Labor burden percentages, what percent applies to what people, how is that set, how is that to be reimbursed. Particularly, what's an allowable and an unallowable cost. there is a long list of costs that need to be considered to be allowable, and I would suggest that you put those costs on the table when you're negotiating your agreement. And in terms of unallowable costs, that should be defined properly, and essentially a cost that, again, that you're going to incur, that you have to incur because of this project, should really be falling into the allowable camp. And that discussion is better to have up front with the owner than later on trying to get paid and having issues with them and that type of thing. Insurance charges. We often see that there's questions about whether certain charges can be charged directly, what's included in fee, how's it handled. Make that clear in your contracts. How markups are applied to contracts, another area. So there's a lot of areas to think about. We can't give you a complete list or an exhaustive list of every single one, but I think the point is pretty clear, and I think we've made that point. The next area is opportunities for cost recovery relate to the controls. So as you think about your project, and just think about the concept of how do you know that all of your project costs across all of your projects are being captured? How do we know they're being captured consistently? How do we know they're being applied to the projects properly? How are the cost drivers being identified? Well, that requires people, processes, and systems. So what system are you using? Who is responsible for capturing the cost? How are they doing it? And do we have processes to make sure that costs are being captured consistently across our projects? And how are we documenting that? How are we training people to capture the cost? All that either translates into your bottom line or it gets lost somewhere in the process of conducting your project and attempting to capture the cost. Project cost accounting and reporting should identify allowable and applicable costs. So what that means is allowable means a cost that specifically delineated as something you can charge, and applicable, another word for applicable is allocable. So there are a number of costs that are incurred that apply to your job you need to be sure to capture. And you have to understand that when you're negotiating the deal, because you're going to negotiate a fee for the job, and that's supposed to cover all your overhead costs. Well, in determining the overhead amount that you're willing to live with and determine the profit amount that you're willing to live with, you have to have a good understanding of the cost drivers for your overhead and what's causing it, and then how you're going to recover that overhead and how that's going to be allocated across your various projects, so that at the end of the day and at the end of the year, you've got a big profit on the bottom line and you've run a successful company. If there isn't in one area in which you can really hurt your company and hurt your success, is in not understanding the basis for allocating costs, overhead costs, among the various projects. And having a good basis for understanding that's going to be critical to your success in the end. So we would encourage you to understand the pool, meaning the numerator, and the base, the denominator, for allocation of costs to your projects. That way you're able to reconcile to historical trends in terms of what your indirect costs are that you're allocating. You're able to ensure that all of your different jobs are picking up the correct amount of cost, and that the rates you're setting for fee are going to be such that there's profit built into the added to the cost allocation, so that you get the recovery you're looking for. And if you're on a federal project, the allowable costs are going to be subject to the federal acquisition regulations, and the allocable costs are going to be subject to the federal cost accounting standards, and that's a whole another level of rigor that's going to be important, because you won't get reimbursed from the federal government on cost reimbursable contracts without an adequate understanding of which costs are allowable per federal rules and which costs are allowable or allocable per federal rules or applicable. and recognizing that the federal government doesn't allow certain types of costs that businesses normally incur as they do business. And so you have to consider that as you're setting your profit and considering the risk associated with the project. In terms of monthly payment applications, just be sure there's cost support for every charge. I would say that we know there are common, these are kind of common issues, and these are things we run across, and we're often asked by audit and tax and consulting clients and non-clients to review a specific cumulative billing to help ensure controls are working. And when we do that, we often find that the billings are incomplete and that they don't match the contract terms, and believe it or not, that's more common than you might think. So when we're asked by an audit client or a tax client to come in and help them with internal controls, which we can do for non-public entities, we invariably find issues with cost support and being able to charge costs. So I guess what I'm saying to you is all of this may sound, for some of you this won't sound easy on the surface, and for some of you it might sound like this is very easy on the surface, but I can tell you across the board we invariably have findings when we come in and look at a project, and those findings are generally about 15 times the fees that we charge, to look at those costs. So we know that money is being left on the table. We know that, if we're working the other side of the equation for the owner, that there are overcharges occurring, and a lot of this has to do with how tightly costs are managed and addressed, as Jeff and I are talking about today. So here's another polling question. So please go ahead and answer this one.
So a best practice to implement immediately would include, as Curtis mentioned, please select one, and you want to be sure and click on the submit button so that your answer is recorded. I notice we have quite a few people on the call today, so we'll go ahead and just give this about 15 seconds to make sure everybody does have the opportunity to record this. As a reminder, if you do wish to receive CPE, you will need to answer 75% of the presented polling questions today. So go ahead and close the polls. What do you think, Curtis? Best practice to implement would include confirming the skills of the accounting bookkeeping staff and ensuring their understanding of the contract terms and reviewing existing internal policies and procedures for submitting the applications and ensure that contract terms are clear to both parties from the outset?
Yep, looks like consensus.
That's what I think too.
All right, so Jeff, go ahead.
Yeah, so my name is Jeff Witt. I work with Curtis. We do a lot of construction audits and also consulting for construction contractors. So change orders is definitely the top of my list for what I'd like to discuss. It's a very frequent subject of our audits, both for the owner and also we have helped contractors with their controls around change orders. And I think one of the main reasons change orders can be a challenge, as Curtis was mentioning earlier, you have a contractor that is typically negotiating a contract based on competition. That may be their typical way of approaching contracting, as is very frequently the case. They then are in a situation where they have a change order arise, or the need for a change order, but they may not have the systems in place that can really come up with good cost estimates to be able to price that change order. Once that change order is priced, it becomes an addition to the contract limit if we're talking about a guaranteed maximum price contract. But to get to that point, there needs to be support for it that they may not easily be able to provide. And that's where we often come into the picture, where there's there is a need for a change order, but it's a matter of what the correct number of quantities are and what the unit prices, for example, should be, or other cost support should be to be able to negotiate that change order. It's a common practice that we see because of time issues on an engagement where a construction project is going on. Both parties want that project to proceed. They don't want any delays in the timing of it. There's a lot of costs involved anytime you have a delay in timing. So it's to the benefit of both parties to try to keep that project going even when you have one of these change conditions arise. And so there's impacts to both the timeline and the budget of the project in that scenario. What happens sometimes is both parties agree to proceed with the work, and they never really address that underlying issue of the change order and how it should be priced. And then maybe a year later that they're trying to close the contract and those issues really come up. And having not dealt with it timely, it becomes a real problem at the end of a project. So as mentioned here, general contractors do assume significant risk in fixed price lump sum change orders. So as we mentioned, those are being used to increase the total GMP or guaranteed maximum price limit if it is a cost type contract, or the total contract value. And so questions arise, for example, about tracking those change order costs after there's been an agreement, if there has been an agreement, so that you can determine at any point in time costs against that change order if it's separate. A lot of times it's not separate, and so it's just added on as an addition to the total contract value, but there's still issues around whether separate tracking in your job cost is needed for that. Something you want to get out of, in front of, and proactively manage so that controls are there to minimize cost and maximize margin. This is beneficial to both sides of the equation, the contractor and the owner, so that both parties have an agreement early on whenever a change condition exists. So areas of focus should include estimating in a complete manner with the knowledge of incurred and expected direct and indirect costs. So when that change condition arises, there needs to be support for the quantities and the amounts involved that would be subject to scrutiny. And you're going to want to have controls on the contractor side to really present that good support to be able to negotiate that change order on a timely basis. On the owner side, you're going to also want to have good controls to be able to evaluate that support. Competitive bids for materials and subcontract work, to obtain that really makes it easy then to evaluate the material and subcontract work components of a change order if you have good competitive bids there. Estimating efficiency, ensuring only specified quantities are ordered to avoid X materials. Tracking actual costs, frequent comparison to budget, particularly if you have a time and material type change order where in order to be able to bill the hours on that T&M change order, you really need to be separately tracking those. Managing your labor costs so as to be profitable. Managing scope of work to avoid scope creep. And ensuring timely review, approval, and entry of cost in the accounting system. As auditors, we say if it's not in the system, it's not something you really can bill, it's not reimbursable, and it doesn't help support your change order processes either. So it's going to be real important to have a system that captures all your costs.
Yeah, and I would ask Curtis here that the minute you have an inkling, like Jeff was talking about, that you're going to have a change order occurring, an event has occurred, follow everything he's talking about here just as soon as you have that inkling. Because basically, in order to recover change order costs, you have to be able to first identify the change orders occurred. A lot of organizations that we work with have, they definitely want to, and they definitely do, put change orders forth, and I don't know many that don't, but a lot of them miss added scope, that the owners asked for. They're doing, we'll do this favor, we're going to do this, we're going to do this other scope, and pretty soon all those favors turn into a lot of extra cost on the project that is not even contemplated or addressed. Or there might be the engineering drawings aren't such that you can actually build the project from it. They aren't far enough along. So the contractors will come in and they went in with one set of assumptions, and now they're working under a different set of assumptions, because they find out they know what actually needs to be done because they actually have to build the project. And so in those situations, it's critical for you to immediately raise a red flag and start identifying the things that Jeff's talking about. So just kind of wanted to point that out, that's where a lot of opportunities missed, is just at the beginning, just identifying it. And the larger the job, the more opportunities like that you're going to miss. And I call it an opportunity because if you do not capture and recover change order costs that you're incurring that was not caused by your company, then that's coming right out of your bottom line, and it can make a profitable job extremely unprofitable.
Excellent point, Curtis. So as we mentioned, all costs should be supported, and this is going to include your self-performed work and your general conditions. If the change is going to necessitate a change in the timing of the project, it's going to affect your general conditions, you need to be able to support all of that at the time you submit for a change order. You're going to want to use that as benchmark by the contractor for monitoring cost and evaluating internal estimating practice. It provides transparency for the owner in approving changes, and it helps to ensure cost recovery. The work should not be performed until the additional work scope is authorized by the owner in writing using one of the following: either a fully executed change order, or written construction change directive for the owner, or a notice to proceed. But even if you have that notice to proceed, you're going to want to pretty quickly negotiate that as a change order. Having the notice to proceed is a good thing. We understand that may be necessitated, that work continue under a notice to proceed, but it doesn't really address the cost equation part of a change order, and that needs to be done in a timely manner. So one thing we do see out there as the support for a change order frequently is a budget for certain schedule values line item versus actual cost for certain schedule value line items, and the difference is the amount of the change order. And we would say that's not a good approach, because just having a budget variance does not really indicate that there's a cost that should be borne by the owner. You have to be able to explain how it was the change condition that caused a change in cost, and that's how you need to price a change order, not based on a difference between your budget and actual. So moving on. So we have a polling question. If you could please answer this question.
So a change in scope has arisen. Under which condition should you not resume work, even if it means promoting a good working relationship? I just want to mention, too, take the opportunity here, is if you've submitted a question and the time for our presentation does not allow us to answer it, we will follow up with you directly following the webcast. So we'll give this just another few seconds, and then we'll close the polls. We've got a pretty savvy audience. So even if it means promoting a good working relationship, a verbal agreement to the change order is simply not acceptable. Have you experienced any of that, Jeff?
Oh, absolutely. We've experienced that, and that becomes a problem when that's occurred and it's not dealt with in the way that is contractually valid. So I think we've talked a lot about change orders, and we're going to move on to some other areas of construction controls at this point. And I think with any construction controls, it really starts with understanding your contracts. The types of controls you have is really going to be dictated by the types of contracts you have. If you have guaranteed maximum price contracts, you're going to need to have some robust controls around your cost. Even if you have lump sum contracts, you're going to want to have some controls around cost because of this change order issue. But you really need to understand your contracts and then design your system of controls to be able to comply with those contracts. So internal controls can help general contractors to increase project profitability, to promote communication and positive owner relationships, and to reduce risks, including risks associated with fixed price lump sum contracts. So contract noncompliance is very costly, and companies find that the development of valid, sound internal controls pays for itself over time. Construction policies and procedures documenting controls should be complete, user-friendly, and regularly reviewed. And all construction project personnel should be required to acknowledge and adhere to policies and procedures. It's certainly not enough just to develop some good policies and procedures. There needs to be training, there needs to be monitoring. Controls that are not implemented in a consistent way do not help achieve desired results. So this is an area where we've been doing more work on the part of contractors. For example, you have a contractor that has DOT-funded contracts, and they're subject to disadvantaged business enterprise reporting requirements. There's a lot to do there, it turns out. And so contractors, especially the bigger ones, may have multiple locations, they're a general contractor on a DOT-funded contract. They have a lot of responsibilities for making sure that the subs on their jobs are they're meeting their DBE requirements. They're usually given a certain percentage that they need to fund those subcontracts. Those need to be DBEs, and it's usually 10%, but it can differ from contract to contract. And as I go through the rest of these slides, I'm going to use that as an example of all the areas that are impacted in your internal control structure just for this one area being DBE compliance. And you can see this is just one area driven by the contracts that you have and the requirements therein that will impact your control structure. So moving on then. Internal general contractor controls should include controls for each of the major construction project phases. So, and this is basically about design, bid, build contracts. If you have a design build contract, obviously a little bit different structure, but we're going to get into the next slide where we're going to go into some further detail then on each of these phases. So I'm just going to move on to that, and we'll talk to that next slide.
And so there's one comment I'd like to add relative to this, and that you have to have controls designed such that when you're going to go from one step of the construction process to the next, whether it be design, actually conceptual design to your final design that you're going to use for building your project, the various design phases in between to actual you move it, and after you move beyond programming and design, you move into like pre-construction and construction and closeout. Certain key actions need to take place as you progress through a construction project, and your controls and your procedures should be defined in such a way that each of the core components of that phase of the project is addressed before you move on to the next one. So we'll just move on here to talk a little bit more about the different phases of a construction project that we have listed out here, where we're talking about design, bid and procurement, pre-construction, construction, and closeout. Here we've listed some of the key actions that need to take place before you move from one step of the construction process to the next. And so Jeff, we'll talk a little bit more about that.
Sounds good. So starting with the design phase, we've got schematic design, design development, construction documents. So using that one example of DBE compliance, It turns out right in the design phase there's a requirement related to DBE compliance that the construction documents be constructed in a way so that you can identify the portions thereof that you could sub out to a DBE. You get into the bid and procurement phase. You've got sole source procedures, you've got bid advertising, administration, and evaluation of the RFP process, and contract awards. Then within that phase also, for example, with DBE, there's requirements regarding your advertising and making sure that you're advertising to these available DBE, disadvantaged business enterprise subcontractors. And if you don't do that, you're going to fail your requirement under the contract and be subject to penalties. You get into the pre-construction phase, and there's a number of things obviously in the pre-construction phase that need to happen, including development of construction project team and the staffing plan, the project preparation, the schedule, values, and other project planning, pre-construction conference and activities, site safety policy review and updates, and approval and authorization levels need to be determined. And again, with our DBE example, there's several of those items that are impacted and need to have controls around them for DBE compliance. So you need to have the project team determined and who the subs are going to be determined at that pre-construction phase, and make sure you're meeting your requirements. In the construction phase, there are a number of items listed: construction meetings, schedule management, cost accounting, billing, contract and change management, subcontractor pre-qualification, and right there is another DBE compliance requirement. And then we get into project closeout, substantial and final completion, submittals, asset tracking. And so I only mention this DBE as a lens for one small area of compliance and all the controls you would need in each of these phases just to meet that DBE compliance requirement that indicates the nature of the issue.
So big picture, as you look at these bullets that we have listed here, if you have strong policies and procedures around each one of these bullets, you're going to be the most profitable, best practice, successful construction contractor on the planet. So, and we would like you to be. So take a look at these and think about them and then apply them. Each one of these areas has a whole set of controls around it. And as Jeff mentioned, DBE is just one area that needs to be covered within each of these various bullets.
So for the internal audit cycle overview, this is just intended to depict the ongoing nature of the internal audit process as integral to your success in developing and monitoring policies and procedures. So what we have seen at Construction Contractors is a variety of skill levels. Some organizations don't even have an internal audit function. Some do. And sometimes those people have certain skill sets, but not other skill sets. So for example, again with this DBE compliance, we've seen large contractors that have internal audit organizations where this contractor is subject to the DBE compliance requirements, and the internal audit organization really doesn't have the skill set to be able to help that organization to comply with those strenuous requirements. So it's really going to be important for you to assess the nature of your internal audit and whether it has the right skill set to be able to address the risks, help you to monitor your policies and procedures, and ensure your success.
So internal audit, is not an event. It's not one thing that happens. Essentially, throughout the year, there's a cycle that internal audit runs through within an organization. And to the extent you co-source it or outsource it or you do it yourself, all these steps are required throughout the year, and they involve the highest levels of your organization to make sure that you are successful. And it starts with the risk assessment, which is at the top of the page, where you look at your company's objectives and you look at the risks that are going to impact the achievement of those objectives. Then you determine what audits you're going to actually go do. It should be risk-based. Then you perform the audits on the right there. At the bottom, then once you do your audits, you identify opportunities for improvement, and almost invariably they'll happen. And hopefully they're good opportunities for improvement, and they're substantial, not just minuscule things that someone might come up with. But you have the kinds of people that Jeff's talking about that can address the variety of risks that you're dealing with, and you come up with some good opportunities for improvement, and then you improve, and then you move on to reporting the status of the audits and the successes you've had. And as you run through this internal audit cycle, just think about how you can improve the success of your organization by continuously finding ways to do things better, to be more competitive, to be more successful, to reinforce the controls you want to have. That's really where you want to go with your business. And an organization that can't reinvent itself and change and improve on a continuous basis is likely going to be an organization that isn't around several years from now. Every successful organization has had to learn to adapt and change and improve along the way. So we have a polling question here. I guess we don't. It kind of looks like one. Sorry about that. But there's a project performance improvement checklist. And essentially these are some key actions that you can want to think about as you do your work. And I believe the slides are available to you. We went through that at the beginning of this, so you'll be able to pull this. And we would encourage you to take this back to your workplace, use this as a tool, and see if you can check all these boxes and make sure you're as successful as you possibly can be. Now we have a polling question. So please answer this question. True or false, errors identified by the owner and in favor of the owner are still perceived as fraud. True or false? And it's obviously a subjective question, so whatever you think, just put it down. Definitely to your benefit to get CPE credit, so to put that down. To the extent you need CPE credit, this will be important. All right, we'll move on to the close the polls there. Tanya, maybe we could just... Got it. So, false. Errors identified by the owner in favor of the owner are still perceived as fraud. 62% of you think that's false, but 37 to 38% of you think it's true. So obviously there is some thought out there that if an error occurs and the owner finds it, then that's going to be perceived as fraud. And I think that is true among many owners, and the other is also true, that a lot of owners recognize that people make mistakes and whatnot, but it's better not to make them in the first place. So bringing this back to the workplace, and just to wrap up, internal controls are clearly key to achieving your cost and profit goals. We talked about that a lot today. Controls are needed in these areas of clarity in contract terms and capturing and billing costs that's incurred, in making sure that your payment applications sail through the reimbursement process and payment process, recovering your costs and maximizing margin on lump sum change orders, and I would say on lump sum contracts, and validating your controls to ensure adequate coverage in each major construction phase, like we just talked about earlier. So with that, we'd like to thank you for your participation. And I think, Tanya, do you have anything that you want to add to kind of wrap up the webinar?
As Curtis mentioned, we did make the PDFs available for you, so if you have questions about these, please don't hesitate to review the slides, and then also to reach out to our presenters. And we'll go ahead and put the information up there for just a minute. You will be receiving an email here shortly. Please take a minute and complete the survey. And thank you again for joining us today.